I'm Cody from Wall Street Breakdown. You know we are reaching the bitter end of the third quarter of earnings season. Today we've got three companies in the thick of the retail sector and another company that's kind of retail but still does a lot of commercial business and stuff like that. They're doing a little bit of everything. We're going to start it off with them. That's Hewlett Packard. Now, they've been spun off into two different companies. There's Hewlett Packard that does all the hardware stuff, computers, all that kind of jazz. Then there's also the Hewlett Packard Enterprises run by CEO Meg Whitman, who said today she is going to be stepping down. Early 2018, Meg Whitman, former CEO of eBay, now CEO of Hewlett Packard Enterprises, and one of the people that's really been helping Hewlett Packard turn this ship around, is going to be stepping down. Hewlett Packard Enterprises, who also reported earnings today, down 6% in the after hours. A lot of people probably just upset. They really like Meg. She's just really good at her job. She seems to leave everybody feeling good about dealing with her. She's just such a really good CEO. Just to hear her speak, she seems very calm, and you understand what her vision is. She seems to be able to convey that really well. We wish Meg Whitman the best in her future endeavors. From what we've been hearing today, there's a potential presidential run in her future. She's out there trying to temper those rumors, but to say that that's probably not on the table for her, I'm not going to say that. I would imagine she'd have quite a bit of fanfare if she did decide to go that route. Hewlett Packard, though, not the Hewlett Packard Enterprises, networking, financial services, storage, all that kind of stuff, but Hewlett Packard, the guys that do the hardware stuff, they did their earnings as well today. 44 cents was in line with the street, $13.9 billion in revenues. That beat the street by $550 million, up 11.1% year over year. So in an economy where the economy is growing great, but we're hearing that sales of computers and everything are still really in the dumps. People just aren't purchasing personal computers, printers, notebooks, near to the extent that they're buying cell phones, laptops, all that other kind of stuff. We've seen other companies really suffer with the downward trend of personal computing being down in 2017, going back probably the last 5-8 years. Hewlett Packard has found a way to start bringing those numbers back up. I guess when you make a good product, that's bound to happen. So in the personal systems category, commercial revenue is up 11%, consumer revenue is up 18%, while notebook sales are up 8%, desktop sales are up 2%, and printer sales up 7%. So while we get the news that Meg Whitman on the spin-off HPE is stepping down, Hewlett Packard, the hardware company, is still doing quite well in sales. It's nice to see a company like this that a few years ago that seemed like it was on its way out has found its way back into the marketplace. Kudos to you, Hewlett Packard. Let's see you continue to do this in 2018. I know the Meg Whitman stepping down is probably going to cause a bit of a snowball effect through Hewlett Packard and Hewlett Packard Enterprises. I heard Meg Whitman is still going to stay on the board of directors over at Hewlett Packard Enterprises. For how long, that's not really, that's not something that we're privy to, but that's probably going to keep people at least a little bit reassured, especially shareholders. Hewlett Packard, though, doing an outstanding job, I would like to say. Now we get on to three retail earnings calls. I know what you're thinking, Cody, come on. We don't even really talk about retail, I thought. We thought brick and mortar was kind of over and done with, right? Well, it's not really over and done with if you're running a really tight ship. That happens to be what they're doing at all three of the earnings calls that we're going to be doing today. That's Lowe's, Dollar Tree, and GameStop. Over at Dollar Tree, $1.01 beat the street by 11 cents. $5.32 billion in revenue beat the street by 40 million. That's up 6.4%. Now, they remodeled a whole bunch of stores over at Dollar Tree. 191 stores already have been remodeled. They've added a whole expanded food assortment. They've got strong consumable sales now. Comparable store sales are up 3.2% across all the brands. The CEO came out today and said across all three regions in the United States that Dollar Tree's in, they're actually up over 3% in comparable store sales in all three regions. So it's growing everywhere that it is. You apparently can go out now to Dollar Tree and purchase all sorts of consumables, new freezers and coolers set up, all sorts of stuff that make Dollar Tree probably a lot more of a stop like a 7-Eleven, as well as what Dollar Tree already offered to you. That makes them much more of a one-stop shop. Obviously, you see the comparable store sales up 3.2%. They're doing the right stuff in bringing the customers in and continuing to turn over that revenue, beating the street, like we said, by $40 million. That's what we like to see out of Dollar Tree. GameStop Now, this is where the money is, right? This is where the money's gonna be, is in video games. Is it gonna be at the retail level? I'm not entirely sure. With digital downloads the way they are, it seems like GameStop is probably gonna be reverted back to being very much a hardware sales company. And of course, anybody who knows anything about video games knows that old video games are not able to be resold the same way that new video games are sold. Like back in the day, you could resell a cartridge. Now it's a lot more proprietary. It has to actually be you that purchased it for a lot of these different systems. So it makes it much more difficult for companies like this to be able to resell old video games, but they're trying their best to find ways around losing the revenue from people coming in and buying used video games. GameStop, 54 cents EPS, beat the street by 11 cents, and that EPS number is up 10% year over year. 1.99 billion in revenues, up 30 million over analyst estimates, and that's up 1.5% year over year. So not an outstanding revenue growth number, despite the fact that GameStop says they've been doing really well in a couple of different categories, especially with hardware. The Switch has been doing really well. A lot of people have really been enjoying the new Xbox One X, and the CEO, Dan DiMatteo, something like that, says that going into the fourth quarter, they really expect that Xbox and the rest of the hardware sales to really drive the holiday season in the fourth quarter. We're hoping GameStop can figure it out. We imagine they're probably not getting near the amount of traffic for new video games when you consider just how easy it is to do digital downloads from your own home. And it's a lot more of an impulse buy, right? You're sitting around with your buddies, it's a Friday night, everybody's doing their thing, and you're like, you know what, there's this new video game that's out, does anybody want to drive? Who can drive at this point, right? You turn on your console, boom, bang, 15 minutes later, you've got the brand new, whatever it happens to be, Gran Turismo, Star Wars Battlefront 2, whatever it happens to be on your console now. And unfortunately, that ends up taking GameStop out of getting their share of the cut. But they did say collectible sales were up quite a bit. Is that going to be a sustainable thing? I'm not entirely sure. Of selling collectibles like Funko Pop and all that kind of stuff is going to be really sustainable over the long run. We've seen where Toys R Us has gone. So maybe as a niche thing, we do see growth there. Obviously, more and more people are becoming keen to the idea that if they're looking for that, GameStop is a place you can go and check it out. So as that happens, you do understand that people are probably going to come. You're going to see sales go up with that. But is that going to be enough to really hedge out all the problems that they're having with, video games, old video games not being sold, digital downloads? There's a lot of stuff, right? Brick and mortar still costs a whole lot to be open. GameStop doing well, but I don't know if they're doing well enough. Comparable store sales across the brand up 1.9%, so still pretty decent growth, and sales up 1.5%. GameStop's doing the best they can. They're trying to diversify their stores as much as possible, trying to bring in as much revenue through the door as they can. But is it going to be something that's sustainable in the long run in the video game industry? With how technological everything is, unfortunately, I don't think GameStop is just going to be a hardware and collectibles store. Is that an investment you want to be making? It's an investment you want to speak to your licensed professional financial advisor about, that's for sure. Let's move on to the best retail earnings call of the day. The number 2 competitor to Home Depot, who had their earnings call last week, is Lowe's. I have a Lowe's right down the street from me. Lowe's earnings per share of $1.05 beat the street by 2 cents. Revenues of $16.77 billion beat the street by $180 million, and that's up 6.5% year over year. Comparable store sales up 5.7%. We talked about this with Home Depot, and that's a very comparable store sale growth as to Home Depot had. Everybody from your DIY guy to the mid-sized builder are going to these companies and purchasing what they need to go ahead and get started or continue on projects that they're working on. These companies are doing really, really well with that. Amazon is not going to be encroaching on a company like Lowe's or Home Depot as quick as they're even going to be encroaching on some of these pharmaceutical companies and medical device companies, from what it sounds like. So a company like Lowe's, while being second in the marketplace, and me always being somebody who likes to take the best of breed, might still be a good investment for you. You might find Lowe's has some numbers that might pique your interest a little more than Home Depot. Again, this is much like GameStop. I would definitely recommend, you might get a little caught up in the numbers. You should definitely consult with your licensed professional financial advisor before doing any type of investing. Merchandise inventory up 12.8%. A lot of this stuff obviously not perishable goods. It's going to be good for a long period of time, and that's 12.39 billion in total of merchandise inventory. Stores are up 25 year over year, bringing the total to 2,144. We've seen a lot of other retail stores cutting the amount of stores they have. Michael Kors, Foot Locker, so on and so forth. Lowe's continues to add to the pool of stores, because when you're growing at a comparable store sale clip of 5.7% for all stores that have been open for at least a year, you might as well add some more new stores in marketplaces where Home Depot by proxy might not be close enough, and you could probably bring in a lot of that money that Home Depot might be leaving on the table. I'm sure Lowe's has some really good strategic plans for growth going forward. There you have it. I'm Cody from Wall Street Breakdown. That was 4 earnings calls as we get close to closing out the earnings season in the third quarter here. As the holidays start to roll around, Lowe's, Dollar Tree, GameStop, Hewlett-Packard, and over at Hewlett-Packard Enterprises, Meg Whitman is stepping down potentially to run for President of the United States. Who am I to say? I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, notification bell, thumbs up for this video, all videos, thumbs up for you guys, thumbs up for these great earnings calls, thumbs up for retail, doing so strong. Is it something that's sustainable? With a company like Lowe's, I definitely think it is. Dollar Tree and GameStop, it could be a big toss-up. Licensed professional financial advisor, but as of right now, in an economy that's doing really well, we love to see all of these retail companies doing this well. I want to see you and your portfolio doing just as well. We want some comments from you. Let us know how we're doing. We love to hear from you guys, and we want you to have an outstanding rest of your Tuesday.